Hello everyone, Mike Arnold here, co-founder of Path Trading Partners along with Bob Iacchino. So, nice little pullback today in Tesla. Pulling back to top of the rotation zone and holding, closing just above it. Still, key line in the stand is pretty much this 363 level. Close below that, then we'll start watching for the bigger pullback. My levels are slightly off the highs, so if we do rally above this 379.49, 3,630, then 393.11 to 395.96, although there's lots of selling pressure coming in up here. Repeatedly, whenever it gets up to these levels, there are lots of selling pressure, so I would not be surprised to see a bigger pullback. One of the reasons somebody pointed out in the comments, it is overbought. Yes, and it can remain more overbought for extended periods of time. I mean, back here it became overbought. That's why we raise our stops. Back here, it became overbought right about here, and look how much higher it went. Now you can raise up your stops and then wait for those key closes and then watch for the bigger pullback. That's also why when we get these divergences, and let me switch over to the weekly chart. When we get our divergences, and you see here where we still have much higher high in price, lower high in the RSI, the shorter one we watch, and yes, it is in overbought territory. It was overbought though for 1, 2, 3, 4 weeks, got the pullback, then now is overbought again, and it's at a lower reading level, so that is a classic divergence pattern. That's why I will not be surprised when we do get the bigger pullback, and that's why historically we teach to raise stops more aggressively when this is, but don't just exit, because things can remain overbought and things like if you exited here after this big rally, it's overbought, you'd miss 1, 2, 3 major more weeks of price action, and then yes, you can raise your stop aggressively and you would have got taken out at some point, so you would have got taken out some point on this week, and you probably would have exited better than if you just exited on that, because this is a weekly bar, so I doubt you'd hold it all week with that. One of the classic things we like to do was when you're getting really aggressive, you can exit on a daily close below the 12.5%, or even if you're less aggressive, below the 25%, and then you'll capture a lot of the gains. So yes, we will not be surprised to see the bigger pullback when we get there, just given the key levels until we get there. Now the rising rotation zone on the weekly now, 341.82. Let's just jump back to the daily and look where the bottom of the rotation zone is on the daily. So on the daily, with the bottom rotation zone about 355. Weekly, let's see, we're looking at about 342. Right in the middle, 346. So it's really the key levels we're going to be watching for on the weekly is about this 342 to 346 area. See if we get a pullback and it holds there. If not, then I'm expecting an even bigger pullback. We could even see the bottom of the rotation zone all the way back down to 325. Now, if any negative news, what Tesla is, and there's some interesting things floating around with cars not being registered and some other problems, and if something eventually hits or they have problems, we could see a much bigger drop. But until then, that's why you trade with stops, and you just keep raising your stops to capture the gains. And you can even see it up at these levels and slightly higher. Whenever it gets up to these key levels on price action, it does result in some selling pressure, and you can have some rapid quick drops. So don't be surprised. That's why lock something in, trade with some stops, at least know where you're exiting. That is a good rule of thumb, and we will talk to everyone soon. That's your end of the week wrap up for Tesla. Bye for now.